Hi guys, welcome back to Wrector with another video, and I'm Mopsit. Uh, so, uh, I mean, during the past few days, where we dumped a lot, I've got a lot of messages saying that I've got liquidated, I've lost most of my money, I've used my additional savings, I've borrowed from my friends, and so and so. Well, guys, trading is not about borrowing. You always need to use the money that you can afford to lose. Okay, that's why wherever you Google up, wherever you YouTube, whatever you want to do, you always find the word risk management. As the word sounds, risk management, all you can do is try to minimize what you can lose, but you can't avoid it. There are times that it takes place, right? So the best thing for you, uh, okay, the best thing that I follow is like if I if I'm on $100 capital account, I use $1 to $2 per single trade. All right. Uh, I mostly like to place my take profit and stop loss at 1 to 2 ratio, as in if I'm investing $1, my stop loss will be at a minus 100% on the leverage, and my take profit areas will, go accordingly. So there are times that I've been emotional and I've used more than what is required, and I've blown my account back then. But then that was like 6 7 months ago. I learned from my mistakes, and then most likely how you are going to learn this through your mistakes as well. Because I believe most of the traders who start their trading, they all face it. Sometimes you just have to go through it, right? So let's get it started. So what you have to do here is you need to identify the support and resistance. So so I see a good, sorry about that. I'm gonna draw a horizontal box. This is my support. I'm gonna make it way to look positive. And I see a good resistance over here since, right, I'm gonna make it red since it's resistance. So what is a support? What is a resistance? If you see a candle come along with the same area, the same price range, and it keeps bouncing back, it either touches the support and bounces back, or it either hits the resistance levels and bounces back. Okay, so you can call that as a support or a resistance. Uh, so some might ask me, why do you want to draw a box instead of drawing a straight horizontal line like this, right? Well, there is a reason to that. If you draw a horizontal line, for example, at 36, I mean, it's just a mental thing, okay? If you draw a line on the horizontal support on 36, if the price reaches somewhere around 35, you will feel bad about it and mentally panic. But if you draw a horizontal box and give a proper range, probably a half a dollar range over here, even if it goes below the required range, you can still manage it because you are already ready for it, right? So for example, if I'm gonna take a long position at this candle right here, I'm gonna keep my stop loss probably at 100%. If I'm gonna use $1, I'm gonna risk $1, and I'm gonna book my profits accordingly and move my stop loss towards the entry. Right? Let's get back to the strategy. So first you need to draw your support and resistance. I'll do a separate video on how to drawing straight line, support, resistance, side line, and whatever it is. So this video is all about the strategy. So what you're gonna need is you're gonna need a, what do you call, a trading view account. The free one is fine, but if you have a paid version where you can use 5 indicators, that's much better. So the first thing you need is the moving average exponential. So I'm gonna switch it on. I'm gonna click on settings. I'm gonna make the length to 200. I'm gonna go to style. I'm gonna select a color which I prefer to keep in mind, and I'm gonna increase the length. Right? Uh, Choosing your colors for indicators is a very important thing, because during the long run, when you start learning and finding out new things, colors matter because you can remember. It's easy for you, right? So you got the EMA. Then you need the least square moving average. Type LSMA and go for the very first one. Built-in least square moving average. You click on settings. The length should be between 20 to 25 for this strategy to work. So I mostly prefer 20. Sometimes I switch it here and there accordingly. The offset should be 8. The source can be close, but then I prefer you to use low as well, because then it will form from a little bit below, which might increase your accuracy. Otherwise, close is fine. So we do that. Then we go back to settings. Choose a color that you can remember. Increase the thickness. I use white, so let white be there. Right. So we have the LSMA, we have the EMA, and then we need the Bollinger Band strategy, BB percentage. You click on the very first one. You go into the settings, adjust the line according to the color needs. Overbought position is the red line on top. I'm going to make this the line on top. I'm going to make this red. I'm going to change the settings. I'm going to give it a little bit of thickness. The oversold area below, I'm going to make it green. Give it a straight line and also increase the thickness. What about the settings? So the source is closed, the standard deviation is 1. So the difference between length is, you can use I recommend you to use between 100 100. So if you change 100, you saw immediately this got changed. So if you look at the difference between 100 and 200, the amount of signals get reduced. So I will tell you how do you look for signals. So I prefer using 100 most of the time, but then during dumps I use 200, right? So let's make this straight line. All right, let's get it started. And then we need MACD. Let's go to the settings of MACD. I'm gonna change the buy signal to green, increase its thickness. The sell signal to red, increase its thickness. Right, so we have our charts over here. So you basically need, so since the free can load only 3 indicators at a time, so I recommend you to use the exponential moving average just once to check where the trend is, and then you can just exit this off. And it's mandatory that you have the BB strategy, the MACD, and the least square moving average. So we also can use the RSI to identify additional overbought and oversold and neutral positions. So just to get this, we don't need the base moving average on RSI. We only need the normal RSI line. So let's get that sorted. So how do you work with RSI? Anything over, I mean, if the green line crosses the 70 range, it means it's an overbought position. You can get ready to sell. If the green line crosses below 30, that means it's an oversold position. You should be looking for buying opportunities. So anytime below the RSI line is below the middle line, which is 50, you should be looking for sell. Whenever it's above 50, you should be looking for buy. So that's the whole point. But then you can just get an idea of this before you take a trade. So in order for this to work, what you need to do is you need to use the Japanese candles, the Heikin Ashi. So let's switch. Right. So let me adjust this. Close the MACD. Move the MACD. Close the RSI. Right. Right. So let's look. Now, what I recommend you, if you are a beginner trader, do not take signals on the opposite direction of the trend. So if the candles form below the orange line, which is the EMA 200, you should always be looking for sell. If the candles are above the EMA 200, you should always be looking for buy signals. So how do you look for a buy and sell signal, right? Let's go into history. Let's just randomly move around here. Right, okay, let's see what has happened here. Where is our buy signal? So how do you identify a buy signal using the BB strategy? So whenever the green line goes down and crosses the green line, you look for a buy signal. Whenever the line goes above and goes below, you look for a sell signal, right? So let's see what has happened. So if you look over here, right, the line has gone below and it has crossed over here. If I can zoom it for you, it has you see the first cross over here, right? Over here you get a buy signal. But then how do you confirm this buy signal? In order for the buy signal to be confirmed, you need a previous cross on the MACD, which is better, and then it is a must that you should see the white line, which is the LSMA line. A beta candle must form above the white line, right? So a beta candle is this shape, exactly like this. So there should be no wicks below. That's a beta candle, and that will be your trade entry confirmation. So on this part, this crosses above, but this is not a beta candle, so it's a failed signal. It crosses above, not a beta candle, and it goes below, it crosses above, you see a beta candle over here, right? So if you look over here, the MACD has been previously crossed. The RSI is just crossing the overbought position. That means it is not overbought yet. So it's a good entry, right? So if you had taken the entry from here on this signal, you would have made a maximum of what? See the highest point over here, 14%. So if you're trading on leverage 20, 20 into 14, you would have made a maximum profit of 280. So let's look for one moment. Let's look for more signals, right? So let's get this area over here. So here you see the line crosses below. If the line crosses below and the moving average is also showing across the below, it is a sell signal. But if you're a beginner, I recommend you not to take this, because you see the orange line, which is the EMA 200. The candles are above. That means you should be only looking for buying signal, which will generate you more profits. So you could take this if you are an experienced trader, or else I recommend you to skip it. So then the line follows, and then it goes below and it cuts on the top, right? So if you look at this area, you could see the RSI is above 50, the MACD is crossed, you have a cross over here, and here is your beta candle, right? So if you had to take a long from here, you get 10% on spot, which is 200% on leverage 20. So let's look for the short signals. So we moved. Here we crossed below the EMA 200. So now we look for shorts. So since this short signal was before we crossed, we could ignore that. We tried to break up. We failed at this point, and then we go up all the way here, and then we cross bottom. So at this area, we are trading below the the exponential moving average 200. The LSMA line is too far below. You see a beta candle formed over here, and you see the what do you call the Bollinger Bands as crossed below. You see the MACD is showing across, and you see the RSI is on a selling area. So you immediately take a sell position, go below from this area. So if you had done that, you would have gained a maximum profit of 90% on leverage 20. Likewise, we cross the moving average 20 from this area. If you look at this one, we cross the moving average 20. Here is your first confirmation, here is your second confirmation, here is your third confirmation. So if you had taken a short from this area, the LSMA line, beta candle, EMA 200, a short signal, if you had taken a signal from here, you would have made a maximum of 260%. So this is a easy scalping strategy. I advise you to use a very good money management uh, method. So happy hunting, make some dollars. If you take 100 trades based on this, more than 70 to 80 will definitely be profitable. All right, guys, happy trading. See you back on the next video. Thank you very much for watching.